I've received some feedback that some of the very beginners of the trading world are struggling, and I want to fill that gap for you. So I've created a presentation to help you get started. It goes through the basics. It will give you all that you need to start to feel comfortable in the world of trading. I'm so excited about what I've got to present to you today. So let's kick off. I want to share with you my recipe for trading success. And I know you're going to love it. It has been such a major part of my life, and all of the riches that are there for you as well. So let's kick off. I want to first of all remind you that I have an AFSL, which is an Australian Financial Services Licence, but I'm not licensed for specific advice. So this is only general advice today, and it's under the guise of education so that you can make your own decisions and make an educated decision about which trades to buy and how to go about your entire trading business. So let me tell you a little bit about my background. I started trading so long ago. And the good part about it was when I started trading back in 1990, I had no idea that one day this would represent my primary source of income. I started out small only because I couldn't see that big picture. But in the corporate world, sometimes things take you by surprise. So going back in time, I had a corporate job, climbing the corporate ladder, and at that stage, trading alongside my job, everything seemed fantastic. I had such a bright future. It was just a wonderful thought to imagine what lay ahead from a corporate perspective. But then one day I had a twitch in this finger and it hurt like hell. And within 2 weeks, this pain had spread up and down both arms, and I was no longer able to move. I could barely look after myself, and I had to leave my job. And at that stage, trading represented the only way out. For me, it was up there with oxygen. When I had to leave my corporate role, it broke my heart because I was so invested in it. I was so sure that was going to be my future. And at that stage, with that seed of hope in my heart, I had no idea that one day trading would represent my life and that I'd be the author of 5 best-selling books. I would be quoted. Apparently, I'm the most quoted author in other people's trading books, which is a wonderful thing. I had no concept that I would end up writing for every newspaper and be quoted in every trading magazine in Australia and New Zealand, and that I'd present around the world about how to trade. I had no concept that that was lying ahead of me. And where you are now could be that beginning for you. Because we really can't envisage our future. And sometimes it's very hard to imagine where we'll be in 3, 5 years' time, 10 years' time down the track. And I think I've got a bit of a grip on that. So I understand if you've had a change of fortune, a life circumstance that has altered. As my friend Michael Yardney says, if you've had a redistribution of wealth because maybe there's been a split in your past, all of that leads you into a position of looking, and that looking can take you into the trading arena, which is just wonderful. And I do urge you to pay attention, because in this presentation, I'm going to give you those basic building blocks about how you can succeed. So let's look at what I want to achieve by the end of this session. Firstly, I want you to understand the difference between fundamental and technical analysis. I also want you to become aware of the technical analysis techniques that are available. And I'm going to give you a broad overview. This has taken me quite a long time to be able to understand and to be able to convey. So if you don't follow along with every aspect, I will totally understand. I also want you to begin to look at trend analysis on shares and indices. And this can start right today, because a lot of us already have trades. We've got them in our superannuation, even if we're not doing it directly. So you can start to look at the trend of those positions, and you can see whether it's going up, down, or sideways. And some of the tools I'm going to give you are so simple but so easy to implement. You're going to be amazed. So let's think about, first of all, why do you want to trade shares? Now, this is a big one. Your why, that reason, that impulse, the thing that's driving you, it's just so important to clarify that. But from a purely mercenary point of view, let's look at that economic clock. Now, often when property's up, the markets are down, and vice versa. To have a spread of asset classes is essential. And without that spread, you're going to have a very bumpy ride sometime in your future. So it's best to consider it now, and it's best to dip your toe into a few different arenas. When I started my journey with trading, I was in a seminar. I had people around me. I had my husband-to-be beside me at that stage. And there was a person from stage, and he said, there are only 3 key ways to make money. Have your own business, invest in property, or invest in the share market, or perhaps a combination of all 3. And I love that because it simplified the choice. So I do urge you to have a look and see what your asset classes are. See where you're reliant. See where your pain points are. Who can take what away from you? Because once you carry the information inside your head about how to trade, about how to invest, nobody can ever take that away from you. And that is a feeling of liberty and freedom. Let's have a look at how to trade like a moron. Now, this is a funny place to start, I know, because often in life we have 2 types of role models. We have the role model that brings us on to greatness, that we want to copy, that we want to emulate. And we also have the role model that we don't want to be like. So let's look at the things we shouldn't be doing to trade effectively. And the first one is people who trade like a moron have no stop loss. They put their money into the market, they think nothing of it, and they never work out an exit plan. That will never, ever work. Every trade I put on, I know where I'm going to exit and the method I'm going to use before I even place that position into the market. And that's essential, and I'll tell you exactly how to do that. People who trade like a moron also overtrade. They go crazy. They trade E-minis and the SPY and Bitcoin and goodness me, ETFs and CFDs and shares and indices, and they really get involved with every instrument over every time frame, but they don't cut their view back. You know, the money is made in the niches here. We are specialists. Good traders will focus on 1, 2, or 3 markets, but probably not more than that. Now, how else to trade like a moron? You can rely on your gut feel. I've heard it so many times. I just felt this one was going to go up. I just knew it. I knew it in my waters. That is not professional. It's not practical, and it's something that will not work over the long run. Sure, you may have an advantage of getting luck on your side. There might be a bit of the, hey, I just won Tats Lotto feel about it. But for the long term, you need to have a trading system. And a trading system tells you when to get in, when to get out, and how much money to put into each position. Everything is pre-considered. Gut feel doesn't play a role at all. Now, another way to really mess things up is to not have a trading plan or not have it written down. So a trading plan is like your business plan. It covers that trading system, your entry, your exit, and your position size, but it also covers things like your accounting structure, what you do when you go on holidays, who will be there to be your beneficiaries if the worst should happen, and you should suffer a demise. So that type of thought process, you can tell that isn't the way people usually approach things. People are usually shoot from the hip and, hey, you know what could go wrong? And then watch those ads and they think the share market is like some sort of Tats Lotto, some sort of, hey, I found this lump of gold on the street type of mentality, when in actual fact, good traders are very specific, very clear, and they premeditate everything in advance. Another way to trade like a moron is to not understand the importance of position sizing. That is how much to put into each trade. Now, for high risk positions, you need to put in less money and you need to determine how to define high risk. That is really, really important. Weirdly as well, people who trade like morons read the news. Now, I know that there are some people in the audience here today who are probably thinking, I read the news, how bad can that be? But actually, studies show that we get swept away with the thought of what could happen, and it makes us shrink. It makes us smaller. Instead of expanding, we get concerned and anxious. And not only that, with trading, you're going to hear all sorts of things. BHP went up on profit taking. Huh? How does that work? I still don't know. I hear that all the time. So don't read the news. Stop it. Just stop reading the news. It will not help your trading. Now, the other way to trade like a moron is to get really annoyed with your spouse, or maybe your dog, or maybe your broker, or maybe the kid. Let's pick an excuse and run with it, because that's what people who don't trade well do. One thing that I think you'll find that most people who are successful don't have patience for is they don't have patience for excuses. They fry out on them. They just go, no, I'm not going to do that. I'm not going to listen to your excuse, and I'm not going to hear my own excuses either. So be careful how you approach your spouse and the people who you love. Now let's talk about using a written trading plan. I want you to be so specific that you can trade like a machine. Now, this is little Stockbot. He is the perfect trader. He's unemotional. He is mechanical. He knows exactly what to do. And I want you to emulate Stockbot. He's my mascot. I had him drawn up by a cartoonist and I love him. Now, fundamental analysis often means that we can't trade like Stockbot. So fundamental details include things like profit and loss. They include the marketing orientation of the company, interviews with the CEO, things that perhaps you can't quantify. And even if you can quantify it, does it make any difference? Does it have an impact on the share price action? I can tell you the effect is very ambiguous. And for me, I used to work at a credit information company and I was a national manager there. I never managed to find an exact correlation between what those companies were doing in the marketplace and their profits and what was happening in the share market. The economy is not the trading world. They are two separate things. And if you mix them, you'd better actually have an alternative in place, which is to look at a share chart to see whose perception is winning and who's putting their money where their mouth is. So let's look at the alternative. Here is a chart. It looks at price and volume action. And over time, you can see a trend. So with this particular chart, the trend is going up, and recently it's been going down a little bit. But that's what we're talking about. Where is the money flowing? And if money is flowing in, the trend goes up, and that's all you need to know. And you can back yourself on those views, and that will really help. Now, how do we do this professionally? You'll need charting software and you'll need data. So the software we can help you with, and the data is the thing that feeds into the software so that it can give you that open, high, low, close, the actual individual building block regarding what's been happening in the markets. And once you've got that, the world's your oyster. You can look at any market around the world. You can chart it. You can chart individual trades in that market, and you can work out how to make money from it. And I think that's really important, because remember, we're doing this to make money, not just for the love of the technical chart. You'll also need a trading plan, and you'll need support. Now, truly, I stymied my own results by not realizing I needed support. And I know you know the importance of this, otherwise you wouldn't be watching me and you wouldn't be listening to this so carefully. You also need a trading platform. Now, this can be something like ComSec. It can be something like ANZ Trading or NAB Trading. And if you want to trade some other types of instruments down the track, you can actually refer to our website, and I'll be able to show you how to do that down the track on tradinggame.com.au, and you can look up our network and our brokers, and you can find some groups there that we use to put our trades on. So trading platform is just where you put the trade into the market, and you do your analysis before you hit the button on the trading platform, and then you're in. So it's pretty easy once you get going. The difficulty is the thought of it. So what you need again is you need the software, you need a trading plan, and you need some way of accessing the internet to be able to get your positions on, which is your trading platform. So let's look at the types of charts that you can look at. Firstly, there's a bar chart, and then there's a line chart. Now, bar charts look at an open, a close, and a high and a low, and it draws a little bar, and then the next day it draws another bar based on that information coming from the market. And a line chart just looks at the closing prices. Now, I started out trading with these, but oh my gosh, I had no idea what I was doing. It is not something that came naturally. I didn't have any education about it. Eventually, I found a broker, and he said to me, look, Louise, I know that you don't have all that much information about how to trade. He goes, look, why don't we use your money and we can learn together, because I don't know that much about it either. Oh my gosh, I thought that was the best deal. Now, I don't know what I was thinking, because wouldn't it have been good to go to somebody with knowledge and information? That would have been a really good heads up, Louise. But I thought it was a wonderful deal, the fact that he was willing to learn alongside me. And we started out looking at bar charts and line charts, and it wasn't for quite a long time until I came across candlestick charts. Now, candlestick charts, they just spoke to me. All of a sudden, there was color, there was movement, and I had a chance of seeing a picture about growth in the actual chart itself. Now, I'm going to take you through how to read a candlestick chart, and how it all came about for me was I said to that broker, look, his name was Chris. I'm surrounded by Chris's. I'm married to a Chris, and my business partner is a Chris as well. But I said to the broker, Chris, I said, look, I'm not making any money out of this. It was after quite a while. I threw a full-on adult tantrum. I don't understand what I'm doing. You don't understand how to make money. I am sick of it. You are going to find me somebody who makes money, and I'm going to learn from them. Otherwise, that's it. I'm going to quit, and I'm over it. It wasn't pretty. It really wasn't pretty. To his credit, though, he rallied and he found me somebody to help, and she became such an important character to me. I only met her the once. I went around to her house. I had a little box of Mrs. Fields cookies, and what do you bring? An expert trader? I have no idea. At that stage, I was thinking Mrs. Fields cookies would be it and a bit. So I went around to her door, and she had these huge cathedral doors, and I knocked on her door, and when I got there, I realized I hadn't told anybody where I was going. I hadn't even told any of my friends the address of this place. I'm thinking, I'm about to be murdered, because she opened the door, outran all these poodles, and she said, get inside now. And so I went, okay. And she said, how are you trading? And I said, I'm trading terribly. I'm not making any money. It's horrible. And she goes, enough excuses. And I'm like, oh my gosh. And she said, do you use candlesticks? And I looked at her and I said, no, What am I thinking of? I'm thinking of candles, actual candles. I'm like, do you light them for ambience? What do you do with these candles? I have no idea. And I said, I don't know what you mean. And she took me into her office. It was a huge, huge house. It was a massive office. She had hand-drawn candlestick charts on the walls on graph paper all around her office. And she said, watch and learn. And she went over to her computer, she got a share price, she came over to the chart on the wall and she drew in a little candle. And she had them all over the place. It was staggering to me. I had no idea. She said to me, you have to read, you have to educate yourself, otherwise you have no place calling yourself a trader. Oh my gosh, I was a bit shocked. I got out of there super fast. I took the book name that she recommended and it arrived eventually. They first of all sent it to Austria because in those days they had no idea where Australia was. And I read that book cover to cover. And here is what it showed me. It showed me that a green candle is the color of growth. It means that money's pouring into that position. The close is positioned above the open, and you can see here with the skinny little anorexic bar chart there on the slide, it's ugly. You know, it doesn't speak to me. There's no color, there's no movement, there's no life. But look at the conversion once it becomes a beautiful green candle. Isn't it gorgeous? All of a sudden, it's got a real body. It's got a shadow above and below, and that's its high and that's its low. So now we're starting to talk. And if it is red, which means that the close is below the open, that means that money is bleeding out of that position. So let's recap. If the close is above the open, that means money's coming into that trade. And if the close is below the open, it means money's leaking out of that position. So green is the color of growth, red is the color of blood, and bang, all of a sudden I had something to visualize. Oh, far out. It was like the world opened up to me. Everything was either growing or shrinking in the market. And all I had to do was find the ones that were growing, and that was my ticket out of anything I didn't want to do in my life. It would be my ticket to dropping my job if I chose to, being a full-time mother. It would be my ticket to holidaying wherever I wanted to go, buying whatever house I wanted, having it decorated the way that I wanted. It was like something turned on in my head. And if you're not at that stage yet, that's okay. I get that. It can take a while, but immerse yourself in this field. Realize that after you've immersed yourself, some revelations will come your way. Now, let's have a look at how to draw in some trend lines, because this is really important. We'll start with downtrends. Now, what we're doing with the trend is we're trying to connect either the highs or the lows on a chart. Now, with the downtrend, you can see the definition is it's a series of lower highs. Now, with that series of lower highs, they can connect up with a line, and you draw that line above those highs, and that's a downtrend. And with an uptrend, it's the opposite. You're looking at a series of higher lows. So once those higher lows occur, you end up with a slope going upward, and you draw an uptrend line underneath that share price action. And that will really give you an idea whether this thing is going up or down. Now, it's interesting as well because there's only 3 directions that a trade can go, is up, down, or sideways. So you can also draw lines in a horizontal way. You can draw a support line, which is where the lows hit along a horizontal line, and you can draw a resistance line where the highs hit along a resistance line, and that will really help. So the first thing you need to do is to practice drawing trend lines, because that will get you set up for understanding the direction regarding of where that trade is going in its past, and then you can predict the future and you can act on those impulses that come up as signals in your charting package. So once you've had a look at trend lines, you can actually start using indicators to help you. Now, indicators come in the charting package, so you don't have to calculate them yourself. Here's an example of a moving average. It looks at the closing prices and divides by the number of periods. You don't have to do that yourself though, because your charting package draws it in automatically for you. And if you draw in two moving averages, you can look for crosses. So you can look for a dead cross or a golden cross, and that is pretty much it. So if you know that you've got a golden cross, that's going to lead to gold. Right? If you've got a dead cross, it's more likely to mean that prices are coming down. Now, if you've got those two major families of indicators, you've got your moving average family and you've got your line family, that is 99% of all of the analysis that I do. That is the absolute key to working out whether a share is going up, down, or sideways. Have a look at the shares that you own. If you've got shares in your portfolio for your super, have a look and see what they are doing. For goodness sake, the fund managers are underperforming my traders. I see year after year, these fund managers have no idea how important it is to stay nimble. They're big, slow-moving behemoths. As an individual trader, we can hop and skip and jump out of the way when trouble occurs, and we can get into positions that will lead us to riches. And that is a real advantage. We don't have, $50 million to move out of a position. We've probably got $5,000 or $50,000 to move out of a position. So we can be a little bit quicker and a little bit sure of ourselves in terms of our own trading plan that, hey, we'll get out of this and we'll get into that. So clearly, there's more to this. But let me tell you a little bit more about my hopes and dreams. When I started and when I began to learn that this was possible and that, hey, candlesticks can help me, trend lines can help me, moving averages can help me, all of a sudden I was on top of the world. I thought at that point, probably where you are right now, every trade I touched would go up and up and up and up, and it would take my money with it. It would be incredible. I would be gifted. It would be just so beautiful. And there'd be a pot of gold at the end of that rainbow. And I would look something like this. I would be so excited and money would rain from the skies. Now, just thinking about what we know about ego and human psychology, how do you think that went for me when I started putting money in the market after I thought I had the key? Well, it went something like this. Instead of the candles going up and up and up, they all crashed down in a heap. It was horrible. It was humiliating. And my equity burnt along with it. And why? It's because I had too much ego. I thought I knew exactly what was going to happen. I thought the person on the other side of the deal was a moron. Always never a good thought because they've done their own analysis. What are they seeing that I'm not? That's more what I'm thinking now. And I didn't have a written trading plan. So all of those things that we talked about, how to trade like a moron, I was doing. I just had a little bit more knowledge at that stage. And I didn't know how to get out of a position. And that's where setting a stop loss is so important, because otherwise you're going to look a little bit like this kitty cat behind the soccer ball. Horrible. So let's look at the basics of setting a stop loss. Now, you can have probably a good 5 hours before you really understand stops ahead of you, but it is only 5 hours. Okay, so it's not too bad. So I'm just going to skim over the top, give you an idea about what lies ahead, and I want you to think about where to set stops on your current trades. Anything that's trending down, it doesn't belong in your portfolio and it doesn't deserve to play with the other trades there. It'll infect them with its awfulness. You only want to be in shares that are going up, because if you're not going to be making money out of them. So the initial stop is when you first get into a trade. That's the most important one, because you're actually looking to see when to get out so that you can protect your capital. Once the share price has gone up, you move into a break-even stop. And then you have a no-loss trade. And after that, you have a trailing stop. So hopefully as the share price goes up and up and up, you're going to follow that with the stop. And once that stop is hit, you're going to get out at a profit. So that is the basics of stops. And let's have a look about how they can be a little confusing at times in terms of maths. I find too much maths and my head pops. I don't know about you, but frankly, most traders aren't that fantastic at maths. I know you think we probably are, but you don't have to be. You just have to understand a little bit about money. Now, let's just take this $100. Okay, here's the $100 that I've got. Now, let's say I lose 50% of it. So I've lost $50. That's what I've got left. That's my equity now. How much do I have to make in terms of percentage on my remaining equity to get back to my initial equity? So how much do I have to make on $50 in percentage terms to get back to 100? Most people initially say 50%, but it's actually 100%. It's actually 100%. If you lose 50% of your position, you have to make 100% back to be able to break even. That's before you even make any money. That is why it's so important that you protect yourself. This minimizing losses chart, for those of you that are more technically minded, have a look at this. It is essential that you protect yourself from a big loss. The big losses can wipe you out and it can take years to recover. This recent COVID situation in the markets, the traders that did the best were the ones that got out before their funds were swept away. GFC, same thing. You can always get back in. If you get out, though, to protect your capital, you will live to trade another day, and survival is what it takes. So far we've covered a bit on entry. We've covered a bit on stops. Now let's look at position sizing. So that's how much money to put into each trade. Now, position sizing is really important, and there is a very complicated way of doing it, or you can just put equal positions into the market. Now, I want to show you the complicated way because equal positions, the maths behind it isn't that pure. It is far better to use this method, which I'm about to show you, and that way you can actually control your risk. You might have heard of the 2% rule. The 2% rule says don't lose more than 2% of your money in a particular position. Actually, backtesting shows 1% outperforms the 2% rule. So let's use 1%. You can have a look through these particular slides. That will give you an idea of what lies ahead. These slides take you through how to set a stop loss. And mathematically, you do not go broke if you keep on using stop losses, because as your equity shrinks, the position size shrinks. As your equity grows, your future position sizes grow. So there are stop losses in place per trade and for your existing portfolio as well. So the idea is with your existing portfolio that you never lose more than 25% of your overall portfolio before you stop entering new positions. That's your overall portfolio stop. I know for some people listening, they're going to go, what in the heck has she just said? Okay, I understand, because for my first year or two, I didn't set a stop. I didn't know how to. It was very confusing. I felt very lost and bewildered by the whole thing. And I know you may be feeling that way now, but I can tell you with a little bit of effort and a little bit of practice, this will become second nature. Think about your profession now. I bet you didn't walk in day one knowing exactly what you know now after several years on the job. That'd be right, wouldn't it? Trading's just the same way. Let yourself get into the arena. Allow yourself time to grow. And sure, some of these things seem quite specific, but with every professional arena, there are specifics that you need to conquer. And once you've got those basics, you are set, because you repeat it and you repeat it and you repeat it, and the results keep coming in. So I do urge you to not lose your head with this, not get yourself so bamboozled that you count yourself out. Some people quit before they even begin, and it's a travesty. There are people dumber than you, with less intellect, with less resources, with less knowledge than you, who have started and who have become exceptional traders. It's got nothing to do with intellect, by the way. So let's just have a little stretch. You know, you've done a lot here today. I'm about to talk to you about some more specifics, but it's really important that you stay alert. So let's take a deep breath and release it. Okay, a bit of a shake. Good, 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 because I need you to concentrate because I've got some great information for you. Now, let's have a look at some of the specifics about how to set those entry points, because I want to give you some things that you can take away from this presentation that you can implement straight away. Now, if we had a bit more time today, I would take you through share stages where things go sideways, up, sideways, down, and basically collapse. Now, just thinking to yourself here, which part of that stage, which part would you like to be involved with? And if you said the growth part, you're right. You want a trade that's going up and up and up and up, and that you can hook into and that you can see the signals. And when do you hook into it? There are two key times. You can get involved at a breakout, and a breakout means that it's gone past its highest high or past a layer of resistance. And that is probably the easiest way to get started. I've given you some specifics here on that slide so that you can read about it. It's during an existing uptrend. You're looking for probably a period of sideways progression or at least a layer of resistance. And you're looking for a long green candle on heavy relative volume to trigger you in. And once you've seen a few of these, you'll never forget it and you'll be able to spot it real time. Now, sure, it'll take you a few goes, but once you've got it, you're set. Let's look at a retracement trade. Now, a retracement trade is where the trade is going up, which is lovely, but it's had a moment of temporary weakness. So it's come down and it's about to go up again. And you can see that you set your stop away from the share price action so that as the trade keeps going up, you have a stop that follows it along the way. Now, if you're familiar with these terms, fantastic. You will spend a lifetime really getting to know how to do this. And I still get a big intellectual kick out of being able to understand how this all comes together. However, to begin with, you're going to feel a bit shaky with it. And that's okay. It's all right. You know, I think the thing is just to keep on going and keep on thinking things through. Because to start with, especially if you're looking at short-term trades or instruments that move very quickly, you will feel like you're going up and down, a big roller coaster. I remember my first trading experiences. Again, things I'm not proud of, but I'm sharing with you so that hopefully you'll be able to see that I get where you're at and I have made all of the mistakes you're about to make before you. So hopefully I can teach you how to tiptoe through that minefield without hurting yourself. I was so excited with my first trades. I remember there was this one called Ross Mining. Every time that went up, it was like I'd hit the jackpot. The first day after I'd got into that share, I said to my husband, oh my gosh, we've hit the big time. I'm never going to have to work again. And you know what? You're never going to have to work again. We can be full-time parents. We can travel the world. It's going to be so exciting. Oh my gosh, this share is going to lead us on to our best possible life. Okay, the next day, the share went down. Oh, goodness me. It went down. How dare it go down? First of all, I'm incredibly angry and then I'm very sad. We're going to be living under a bridge. I'm never going to get the hang of this, I say to my husband. My husband's looking at me at this stage going, oh, have I got another 60 years of this? What's going on? We're going to be living under a bridge in a cardboard box. It is horrible. I'm never going to be able to do this. You're never going to be able to do this. We're going to be working until we're 75. Oh. Now, Just thinking about this and knowing what we know about the importance of detachment when it comes to investing, do you think this up and down cycle is a good idea? Probably not. And you'd be right. Not only would I drive my spouse crazy with this, I'd also drive myself crazy, and I would be more likely to quit. So, the idea behind all of this self mastery and all of this work we're doing on ourselves is that we even out our temperament. We need to get so clear on our goals and so clear with our trading plan that nothing can sway us. Remember Stockbot, the little robot? Yeah? Stockbot is a gorgeous creature, and he doesn't go up and down. He doesn't go crazy like that. He stays very flat with his emotion. Whether it's a profit, whether it's a loss, he treats it the same. And I urge you to do the same as well. Now, to the exciting part. I have got a very special competition for you, and I think you're going to love it because you've got a chance to win a free trading pack. Now, I want you to pay attention to this slide. I'm going to talk you through how this trader feels, and then I'm going to tell you what you need to do to get involved in the competition. Now, you know, probability is very important for traders. There won't be that many people involved in this competition. Your probability of winning is extremely high. So let's have a look at this particular trader's views. So the person sees the chart going up and they say, it's going up. I'll watch this one. It's a good company. Then they say, I'll wait for confirmation and then I'll buy. Oh, damn, I'd better buy now. Then they realize, oh, it's going down. It'll go up. Surely it will. I'll buy more. The price is lower. Ouch, as soon as it goes up, I'll sell. Oh, good, it's gone up. I'm getting out. Oh my gosh, what the? I knew this had happened. I'll buy again. Oh, it's a double top. I'll get out. You can't go broke taking a profit. So that trader sure did a lot of things incorrectly. There is no doubt. But I've got something special for you. I want you to think about the top thing that that trader did wrong that will send them broke. And once I receive that answer by email from you to Louise at tradinggame.com.au, the first correct response will win this Trading Secrets pack. You're going to love it. It's $470 of value. You'll get 3 books, 2 of my books, 1 of my business partners, Chris Tate's, and a couple of CDs, and a year of forum access so that you can get your personal questions about the markets answered on the forum. So doesn't that trading pack look fantastic? And because you're on priority notification, you might have noticed that we've put the foundation book pack into that free pack that we're giving away. It's my book, Trading Secrets, and my book, Charting Secrets, and Chris Tate's book, The Art of Trading, as well as some extra bells and whistles there. So they are prerequisites for the mentor program, and you could win that pack for free if you answer this question correctly. Now, I'm looking for the first correct answer, and I'm looking for it to be emailed to me. So here is the question. What is the problem, if they keep repeating that problem, that will send this trader broke? So have a look at that chart, have a look at the ups and downs. I'm sure that you've already seen that they've done many, many things wrong. Even if you don't have information prior to this video about trading, you'll see that that trader was really in trouble from the start with their attitude. But I want you to articulate what will send them broke if they keep doing this one thing. So it'll be the first correct entry, email to me, Louise at tradinggame.com.au, and you will win that pack. Now, I'm so excited about this. I haven't done a giveaway for the longest period of time. You have totally immersed yourself in this video, and I love it, which means you have a very high probability of winning this competition. So send me that email, do it straight away. As soon as you think you've got the major thing that will send that trader broke, email it to me, louise@tradinggame.com.au. That is my personal email, and that's where you'll send the email to. And just one other resource before I go. I know a lot of you have already discovered Talking Trading, but Talking Trading is our free weekly trading podcast. So register by going to talkingtrading.com.au. You can see past episodes there, but register so that I can directly email you new episodes. I think this has been one of the things that I've just adored doing as a passion project. We're nearly 400 episodes in. We've been going for the last 7 or 8 years with this podcast. We definitely led the way with podcasts. I mean, a lot of podcasts are out there now, but really you're going to adore this one. We talk to traders who've made it big. We talk to members of my mentor program and my inner circle of trading friends, and you'll get to meet Caroline Stephen, who is our financial journalist. I have loved spending this time with you. I hope you enjoyed my recipe for trading success, and really stay glued to your email. I have other resources to give you. I'm so excited you're on priority notification and that you're looking to get involved with our mentor program for next year.